Thanks, Eric. And yeah, we do anticipate a big year this year for Constantine, and I've got the next 9 minutes and 53 seconds to convince you. So to start the year, the early part of this year, we spent some time getting our ship in shape. That involved adding some key technical talent to the management team to help us execute our plans. We also recently announced a big financing. That was the beginning of this month, $10 million private placement. Brought in a key new strategic shareholder, Electrum, big private equity firm out of New York, backed by Thomas Kaplan. Great endorsement of the company. Their track record is really identifying good teams with good projects where there's a fundamental value opportunity, and we're very pleased to have them as shareholders. What you see here for share structure and shareholder distribution there, that's all sort of upon close. Close is imminent of this financing. Tied to that financing, we also did a consolidation, 4-for-1. The objective with that was to really tighten up the share structure and make it more attractive to bring in new shareholders. We've got a lot of key long-term shareholders here. Want to make the story attractive to some new folks as well. Also tied to that financing, that same news release, we announced plans for a spin-out of our gold assets. Our Alaskan project, our Palmer project, is really the flagship for us, but we've got some very good quality gold assets that have kind of been buried in the company, so our intent is to spin those out into NewCo and let our existing shareholders get a big chunk of that company once it comes out. So for Constantine, for the Palmer project is our flagship. It's really sort of two stories in one. We've got an advanced stage, or advancing a well-established resource, and we've got a property that has numerous other prospects and zones that we think show all the potential of hosting multiple deposits. We're really at a transition point. We've been an exploration play for kind of a pure exploration play for a number of years. Now we're getting serious to start looking at the economics of what we have, and we're going to initiate some of that work this year. We're located in southeast Alaska. It's a coastal area, year-round, ice-free ports, and we're in a belt of rocks that host some very high-quality deposits. Some people see VMS as being small or poddy. It's not the case for this belt. It's known for very large and very high-grade deposits. We're kind of at the north of us is Windy Craggy. It's 300 million tons. To the south of us is Greens Creek, one of the richest VMS mines in the world. It's been in operation now for over 3 decades. A spectacular deposit, really a primary silver producer. Zooming in on our property, it's a large land position. The core is under joint venture with a Japanese smelting company, Dowa Metals and Mining. They operate the largest zinc smelter in Japan. Fantastic partners. They have 49%, we have 51%, and we're operators going forwards on this. And that property is surrounded by lands that we control 100%. The mineralization transects both land packages, or the whole land package. Currently, the resource, however, sits on the JV lands. This slide kind of highlights, I guess, the prospects. There's over 25 base metal, precious and barite type occurrences throughout the project area. Our work to date is really focused on the resource area. Last year was the first year we got out to drill any of these other prospects. Our first hole led to the AG zone at the Nunatak prospect, and we're quite excited about that, and we think there's many more to come. So zeroing in on those prospects, our goal over the next couple of years here is to essentially double our resource base and find a bunch more deposits in the process. So just walking you from sort of top right, and we'll go clockwise around. Our resource last year, we had some fantastic holes on the west edge of the deposit. It's wide open for expansion, 45 meters of 2.5% copper and 7% zinc. So we intend to be following up on that. The deposit itself is about, it's folded in a mountain. It's a big mountain scale fold. If you unfold it, it's about 1.5 kilometers long. Our very deepest at the far end of that deposit it was our very thickest intersection. It was about 90 meters and 9.5% zinc equivalent. Then we lost the deposit. It got offset by a fault. We've got a bead on where it is right now, and we plan to go in and test that offset target, which we call a Kudo offset. We think there's very good potential for this deposit to just keep growing. New AG zone discovery, very silver-rich, a little more akin to the Greens Creek type mineralization. Discovery hole was about 10 meters, 8 to 10 ounces per ton silver and about 1 gram gold. We followed that up with some 20-plus meter intersections of 8 to 10 ounces silver, as well as some sort of 10 to 20 meters of 10+% zinc. It's an exciting new prospect that's wide open for follow-up. In addition to that, we've got some other prospects that have never seen a drill hole. We flew geophysics for the first time last year. We were able to fingerprint our known resource and compare that to other prospects on the property. These are prospects where we've got high grade at surface. The AG zone, it was sticking out of the ground, had never been drilled. We've got other prospects like that with some very good grade at surface, so we're pretty excited about getting out and drilling these guys. Switching gears and focusing on what we have right now. We have not done any economic analysis on the project. We don't have a PEA, but we're going to start that. But conceptually, we're putting together some numbers here to just highlight what we think is the opportunity with the project. Everyone likes grade, say grade is king, but it's really margin is what it's all about. And margin is simply what you can sell your product for, less what it costs you to take it out of the ground. For us, I put some numbers up here, an NSR number, between $175 to $220 a ton. That's based on metallurgical recovery, smelter treatment, et cetera, and using fairly conservative metal prices, $1.15 zinc, $3.15 copper. From a mine cost perspective, the next few slides I'll walk you through why we think we're going to be a lower cost type of operation. And we grab these numbers from what we know about our deposit and compare it to other operating mines and PFS type operations. And to kind of put it simply, I've always been told if your margins double, if your value of your ore is twice what it costs you to get it out of the ground, you got a good operation on your hands. And we're looking at about 2.5 to 3.5 times. So looking good. So now just in terms of where we sit in terms of grade, I've thrown up a zinc equivalent comp here, basically for various undeveloped zinc-rich projects. I could equally put up a copper comp slide because we're about equal parts copper to zinc, but zinc's popular these days. And what you see is we're sitting at the high end. Using our NSR formula, I used the same formula we used for our resource to calculate zinc equivalent. Everyone does it different. I used the one we had for ours and applied it to everyone that I looked at there. We're at the high end. What I've also added on here is the value of the barite. We're a very unique deposit in that about 25% of our deposit, one of what would be considered gang minerals, is barite. It's an industrial commodity, and we're currently evaluating the potential of selling that. The key is being close to tidewater, which we are. So speaking to that, we are on a highway system, gravel road right to the base of the property, 60 kilometers from the deposit to deep tidewater. It's absolutely key in base metal projects. It has a huge impact on your overall economics. Deposit sits there on the left side of the slide in the side of the mountain. This would be a high-grade underground type operation. Looking the other way, up valley, the deposit, as we defined, the south wall in our W zone sitting in the mountain. This is steep terrain, but it's actually a huge advantage for mining because you can access it from below, which means lower capital cost to get your mine started. And then as you mine, there's most places you put a hole in the ground and you go down. We'll put a hole in the ground and go up to start mining and then use gravity to our favor and also the other prospects that are close at hand. Lots of other flat terrain in the environment immediately surrounding us. So to pull this together, metallurgy is looking good. We've got soft ore. It liberates at a coarse to medium grain size, so low energy costs. Very thick, wide zones that are steeply dipping, amenable to long hole stoping. We're looking at a base case mining rate of 2,500 tons per day. Keep your costs low. And one thing that I think is not appreciated enough is having no remote camp costs. We love people that can live in town, drive 40 minutes out to where we are. It's a great setup. So basically all signs are suggesting we should have a lower cost operation. So our game plan for 2018 is to prove it. So step one is update our metallurgy, show that we can market a saleable barite con. We know if we can produce something that's saleable, we've got to, we'll beat everybody else, because right now the U.S. is importing 80% of it from China and India. It's all used for drill mud. It's a big market. We could maybe make up 5–10% of the U.S. domestic supply. Number two is update our resource. That's in process right now. We expect to have that out in the coming weeks to months, maybe early July, late June. And on the back of that, we're going to initiate a PEA to see what the economics look like on this project. And if it's robust, and we hope and expect that it will be, it'll be a good chance for a re-rate on the share price. At the same time, we'll be doing a lot of drilling. Just to go back to that last slide, these are good quality projects. We got 10,000 meters. I heard someone say to me that gives you a lot of lottery tickets. That's all I got. Thanks.